Hi everyone. Today let's talk about Jamie Dimon's take on the economy. Then we'll take a look at the economic and earnings calendars. Then we'll get into the charts, as well as my results for the week and my thoughts going into next week.
If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started.
So JP Morgan reported earnings and they did very well, but Jamie Dimon continues to warn against a potential economic downturn. And they mentioned that here, JP Morgan Chase posted a very strong third quarter. Profits climbed 35% to $13.2 billion from a quarter ago. Revenue advanced 22%. This is massive growth for a bank. Overall, the sector is still sitting on $558 billion in unrealized losses due to the rapid rise in interest rates, meaning that those bond prices have gone down and they are still sitting on the balance sheets. JP Morgan Chase also acquired First Republic as they went bankrupt due to the losses plus outflows from the bank. They couldn't meet the capital requirements anymore. But JP Morgan has been leading the sector for a long time and they were still able to notch double-digit gains on profits and revenue. But despite all that, Jamie Dimon came out and said there is a looming economic hurricane, and right now everything is sunny and things are going fine, but he is very concerned of what's going to come, and he did warn of a recession in Q1 of next year. As a result of this positive earnings, they jumped 3%, and we'll take a look at the financial sector once we get over to the charts. But it is interesting to see the contrast in this quarter's results versus the forecast that Jamie Dimon is talking about. Moving over to sentiment, we had a massive swing this week. We were well below historical averages for bulls in the previous read at 30%, and then we jumped to 40%, which is higher than the historical average. And that really ate out of the neutral group because bears are still pretty high here at 36% versus the 31% historical average. So neutral, much lower than average, but the bulls and the bears are still both higher, which is interesting. I think that might lead to a little bit more volatility because people are picking sides versus sitting in the middle at this point, and neutral seems to be getting squeezed. Moving over to fear and greed index, you can see we are still deep in fear. Previous read was 35. Currently sitting at 29 with that move down on Friday. 1 week ago, we were in extreme fear, and we might get back there again at some point this week. You can see on the market momentum, we are in fear. We moved down, we had that pretty strong rally, and now we broke back down below the 125-day moving average on the S&Ps. That looks quite weak. Stock market strength also looking weak. Breadth also in a low range. We'll look at that on the breadth chart later as well. Put call range, still pretty high. Anything around that 1 range for the overall market is pretty high. And that's still where we're sitting right now. Volatility, definitely in fear at this point. You can see that rally up. Back test of the 50-day moving average, rally up from that level. Safe haven demand, extreme fear, makes sense. And then junk bond demand has been in extreme greed, but this stepped down into greed here as junk bonds have been selling off here recently. Moving over to the calendars for this week, economic calendar, basically nothing on Monday. Federal budget, that's interesting. Looks like it's estimated to be negative. That could be cool. Tuesday, tons of stuff. Core retail sales, super important at 8:30. We got CPI for the Eurozone on Wednesday. And then we got crude inventories as well as building permits at 8:30. Got Fed Bowman speaking in the afternoon. They've been job owning quite a bit here recently. Looking at Thursday, initial jobless claims as always. The job market has remained very strong. And then you got existing home sales. Fed Powell speaking. We'll see if that's relevant as it gets closer. He's been speaking a few times and most of them have not really been relevant. Fed balance sheet. We'll see if that continues the sell-off. It was basically flat this week. And then nothing really here on Friday. In terms of earnings, we are definitely in the swing of it now. Charles Schwab on Monday, Bank of America on Tuesday, Goldman Sachs also interesting, United Airlines on Tuesday as well. And then Wednesday, a massive day. We have Tesla after hours, also have Netflix after hours. Those are going to be interesting. Looking at Thursday, Philip Morris, Union Pacific, AT&T, all very interesting on Thursday. And then for Friday, we have American Express leading the pack. Moving over to Max Payne, this is going to be an interesting one. This is the 3rd week option expiration. You can see we're already at nearly 3.5 million options for the week expiring on Friday. Max Payne sitting at 431. We are basically on that already to the penny. You can see 430, decent put wall, 425. 420, absolutely do not expect to get that low at the close. 431, probably all the way up to 435 makes sense. But I wouldn't expect to get above 440. That would be a pretty strong rally. So this little trough here in the middle makes sense, and we'll continue to follow this throughout the week. Moving over to the charts, starting off with the S&Ps here on the weekly chart. It looks like we're in kind of a flag setup at this point. The question is, are we going to follow through, test the upper bound sitting around 44.40? If we test that level, that'd be a nice move up to VWAP, sitting in that same range. You would also see momentum step towards bullish. That would also be interesting. At this point, we've basically finished this down move based on momentum. We were flat from last week to this week in terms of momentum, and that typically means the next week is going to be a step down. Doesn't mean we can't consolidate at this range, but if we get back up to the top here and break out, then we should expect a much larger up move based on this flag pattern. Of course, we could absolutely break down as well, and that would invalidate the flag pattern. Moving over to the daily chart, it does look much weaker. You can see that follow through from bearish to bullish, and then we had a step down on the Friday session. If we get through that 9 EMA and the 144 EMA basically sitting at the same level, 43.10, then we should expect a move back down to these previous lows, and then we have to see if the 200 is going to hold. And if we hold and rally up through a midpoint at a double bottom type setup, then we would expect a breakout of this flag pattern. In terms of levels, you can see we're watching 431.71. Been watching that level for a while. We did just barely get below it, so the next one for support would be down at 428.59. Just below those EMAs and SMAs. You also have that bottom of the flag pattern sitting in that same range, and then the 200 SMA on the daily chart sitting around that 421.08 level. Moving over to the NASDAQ on the weekly, similar flag setup, but here we did wick the top of that flag already. Did get a rejection from that level, but momentum on the weekly chart stepping towards bullish. So we've already stepped down, whereas the S&Ps have not done it yet. And if this breaks out early, that could be a leading indicator that the SPY is set to break out as well, which would be interesting. Again, you still have to respect this trend line here, and it can reject down to these previous lows one more time. And that would be around 14,300. And then we have major trend support sitting around 13,925. If we did get into that range, that would be a pretty substantial sell-off. Obviously, I don't think that's going to happen in 1 week, but we didn't make it to this major trend resistance quite yet to the upside. And so far, we are still in a technical bull trend, and you can see that here well above the longer-term EMAs. And if in the longer-term upside target, still sitting around that 17,300 area. Moving over to the daily chart, you can see that same structure. 9 EMA on the daily chart getting above the 21, which is a good sign, but momentum stepping down just like on the SPY. If it comes down to this trend line here, that would be 14,800. And then if that breaks here, we're watching the 144 at 14,446. And then we have this medium term downtrend line sitting at 14,200. That would be a massive move to the downside. We do have to respect this big bearish day that we had. Typically, that means we're going to see some follow through. Just like we saw here, we saw consolidation, big bearish day, consolidation, and then we got the continuation. These big moves tend to carry quite a bit of momentum and a higher probability of follow through. In terms of levels, I'm watching 364.84. We did test that level on the Friday session, but it did hold. You can see we tested that same level here on 20 September. We ended up gapping through that range. So key level here, if it holds, could actually look for a bigger move higher and a higher low setup. If it falls through that level, next level for me is 361.58. And then 358.04 below that. Moving over to the IWM on the weekly chart, this still looks basically like a dumpster fire. You can see this huge wick on the week, got all the way up to that 176 area before rejecting down, still got 2 bearish candles in a row on the weekly chart, still strong bearish momentum. Technically, we're below my 170.35 level, but you can see all these wicks in the same range. 167.50 is an absolutely critical level. You can see that wick low here from March. It wouldn't surprise me that much if we ended up holding in this range. This was a critical level before, but if this breaks down, there is a lot of room to the downside. You could argue for some support around 164, and then below that, there is basically nothing for a long time. Last time we were in this range is all the way back to October of 20. Zooming out here, you can see there is quite a lot of room if these most recent lows break. Moving over to the daily chart, you can see that run up that we had early in the week, hit the 21 EMA and then sold off 2 really strong days in a row, but you can see that critical support that we are in right now. You need it to hold if we're going to show any kind of upside potential. And you can see this setup is very similar to the previous move. Got into the same range, broke down here to the same area, consolidated here for a while, and then we rallied up. So you could argue maybe we're going to see a consolidation for a bit longer and then see a move higher. But either way, this area needs to hold. 170.35 is the current level, 167.50 to the downside. Moving over to the Dow. On the weekly chart, you can see that wick low that we had the previous week. We ended up getting a bullish candle, so you could argue this is a bullish setup here. Last time we had kind of a wick low bullish setup, we got a nice little move through the next few weeks. And that's certainly possible here. We have not seen a step down on momentum yet. You want to see that start to step towards bullish. But so far, this is not bad. We tested that highly traded zone. Want to see it get above there. You really want to see it get above 339.11 as well. Start to test the 21 EMA sitting at 342.88. That's my next level above the 339 level. Overall, this doesn't look that terrible as a setup. Moving over to the daily chart, you can see that rally up. We did have the wick down on Thursday, but the Friday session was an inside candle. Did wick the lows, did wick the highs between this range, but it really held and it looked okay. Inside candle could be a continuation down type setup, but momentum slightly bullish. Volume on the day was a pretty significant step up and we didn't really see that sell-off, which was interesting. Again, you need it to hold 335.91, want to see it get above 339. Look for that rally to those next levels, 343 or 345. Moving over to the Russell on the weekly chart, you can see we had the move down similar to the Russell. We got a wick low, got a slightly bullish candle, but not much, 0.21%. Momentum still bearish, volume fading on that bullish candle. Interesting here, not really giving us clear direction. So we got a wick to the low, wick to the high. Clearly indecisive on the equal weighted S&Ps. Again, similar to the Russell in terms of a critical level. You can see these previous wick lows from December. Same here in March, same here in May. You need this area to hold if it's going to rally. You also want that 200 SMA to hold at 136.36. On the weekly chart, super important level. If we break below that, that could be an absolute disaster. Zooming out here, you can see that is critical. You could maybe find some support at these previous wick lows around 130 and then down at 127. But if those areas break, then there's really not a lot of support until you get down to 117. And then you could argue for this gap fill going all the way back to November of 20. And that would be an absolute disaster here on the equal weighted S&Ps. Moving over to the daily chart, similar thesis to the Russell and the Dow. Big downtrend. Found some rally last week. 2 bearish days in a row, but we're holding that level at 140.24. You need that to hold. Could maybe dip low, set up a double bottom or a higher low setup, but really you don't want to get below that 137.23 level. Otherwise, it's going to be the same thesis from the weekly chart. So still a downtrend, but at an interesting level. Moving over to the ratios, starting off with copper versus gold, we had an absolute disaster of a week on this ratio. Gold decided to rally super aggressively. We'll take a look at that later on the charts. But look at this candle, 6.4% to the downside. I'm not sure what was happening with copper, but I know gold was moving pretty rapidly to the upside after a pretty steady downtrend. In my opinion, this is a bit of a bad omen for the major markets, and perhaps that's why we were seeing the Russell sell off so strongly. Moving over to SPY Russell and NASDAQ SPY, Russell massively underperformed. We saw it on the charts. SPY moving up really strongly over the last 2 weeks versus the Russell. And then we have the NASDAQ Russell basically flat on the week, meaning that the NASDAQ also massively outperformed the Russell, which overall is not a great omen for markets. You want as many participants to the upside as possible, and we are not seeing that right now. We have NASDAQ SPY outperforming, Russell definitely weaker. Moving over to SPY divided by the M2 money supply, you can see same thesis to the SPY. We are in this flag type setup to the downside. Could not get above that 21.22 level. Got pretty close to it. The wick high for this candle was 21.10, so we did get close to that range. We did get the cross on the 21 and the 9 EMA on the weekly chart, but we're stuck between this range here now, 21.22 down to 20.50. wicked that low yesterday, wicked that low in last week's candle. If we do see a follow through to the downside down to that 144 EMA around 20, that would be pretty weak to me. However, we did see a step down on momentum, something we didn't see on the regular S&Ps, which could be a potential that we are finding a nice little bottom here. We just need to see a pullback, higher low or double bottom, and then we could rally back into this range or maybe even make a new high, certainly possible. But remember, this is an absolutely critical level at 2205, marking that COVID high, all-time high, and then most recent high. Moving over to Apple, similar flag type setup. We have 3 highs now. We did get some rejection in the Friday session. Might pull back some more going into early next week. Tesla, similar thesis, wicked resistance, broke down, saw really bearish days on Thursday, Friday. You can see that bearish momentum here, RSI rolling over from the SMA. It does look like it's going to pretty much move lower into that earnings announcement, and then that's going to be the big driver here for Tesla. We obviously have their earnings this week. We talked about that earlier. Apple looks neutral in this wedge. Tesla looking pretty weak, coming off of resistance. Moving over to Microsoft and Netflix. Microsoft threw a wick to the upside, hit that 21 in VWAP, found resistance. Still nice double bottom. You want to see this follow through, take out the midpoint and rally up to new highs. That would be nice on Microsoft. And then I wanted to bring up Netflix here. This has been a dumpster fire here recently, and they do have earnings this week. You can see they've moved all the way down to the 55-week moving average. And that is the last moving average that we have to pay attention to on the weekly chart. Once that breaks, we are basically in free fall in terms of dynamic support. Obviously, there's going to be some support levels in this range. You got 322, 305, also interesting. And then you got this previous low here from March sitting at 292. So some horizontal support, but we will be below all the EMAs on the weekly chart. Super critical earnings here for Netflix from a technical perspective. Moving over to staples and discretionaries. Staples wicked the low at 65.24, still holding 66.27 on a weekly basis. And if you look at the shorter time frames, this is actually a double bottom at this level. Momentum, you want to see that move higher here at this level. Step out of that bearish momentum. You can see volume has been building at this level as we have been holding, which is what you want to see. Bullish candle, highest volume yet, giving you some pretty good indicators that we might see some up moves from this area. We are very extended on the weekly chart, oversold conditions. You don't see that very often, especially on staples. So potentially a good area in terms of risk reward. And then looking at discretionaries here, another doji. So we've had 3 dojis in a row. This week was actually a down 1%. We still have bearish momentum, bearish RSI, but that 200 SMA continues to hold at 156.65. Super interesting. And then 158.03 continues to hold as well, despite 3 tests. And of course, you still have to respect this high, lower high setup, big bearish candle. We also took out the midpoint at that 162 area, but the 200 SMA could trump that. Moving over to gold and financials, we said we would talk about gold. You can see it had been in this downtrend, and then that 200 broke pretty strongly. We went from 178.50 all the way down to 168.50, pretty big move for gold. And then we had a massive run over the last couple of days, jumping from that same level right back to the 200 at 178.95. If this breaks out here, that could be a nice little move. Most recent high sitting up around 190. Got the 144 EMA sitting at 180.72. Super interesting. Tons of momentum, tons of volume. Look at that volume candle on the last day of the week. Massive on gold. Definitely interesting. Then we talked about financials earlier. They have really been in a pretty bad spot here on the daily chart. We made some highs in mid-September, and since then we sold off pretty dramatically, almost 10% on financials from that 35 area down to the 32 area. And since then we've had a couple of days in a row of bullishness, came down and retested that 9 EMA, which held. You really want to see it hold that level. If we get below the 9 EMA on the daily chart, that could be pretty bearish. But right now we had a high, lower high setup. Got the breakdown. So at this point, to me, this down move has kind of finished in this previous range. You can see last time we were in this area, we ended up getting an up move. This is going all the way back to March through May of this year. And you can actually see a very similar setup. We ended up breaking through that 9 EMA and then it held for a while and got a nice little up move here. And that's really what I would be looking for. You need it to hold that 9 EMA at 32.98. And as long as that holds, you could probably ride this up into that 34.50 area. Moving over to breadth on the 50 and the 200. On the 50, this looks great. So we got the wick low, bullish candle follow through, step down on momentum. Everything you would want to see is good here. Now you want to see a move like this, right? Where we get a massive move on the week, get back into this range. Then you would see a dip low and a continuation. Then you might want to look for a bigger pullback at that time. But if we follow this same thesis that we had here, big breakdown, find support, 2 weeks in a row bullish. That third week could be an absolute monster. You do have to respect that. 200-day average, however, not showing the same kind of movement yet. We did get a step down from bearish momentum. In the last few times that we got that, we ended up seeing at least some follow through to the upside, so you have to respect it. 36.23 continues to hold. This could just be an initial rejection, and then we see the follow through in the next 2 to 3 weeks. Certainly possible. But right now, everything on breadth is still pointing to bullish, even if it's not doing it super cleanly yet. Moving over to yields just for a moment, if that bullish thesis on breadth is going to follow through, we need these yields to really pull back, and they are just not doing it yet. 2-year yield continues to remain strong, holding that 55 EMA at the end of the week. 10-year yield did sell off quite a bit on the Friday session, 1.89% to the downside. Couldn't quite engulf the candle from Thursday. Really, I want to see that 21 EMA break start to push back towards that 55 EMA, down to around 4 1/3. Still have bearish momentum, still have bearish RSI, so still looks okay for yields to go lower. But go back to the Friday video, we talked about the bad 30-year auction that we had, which is not a great indicator for yields to go to the downside. There's just not a lot of demand for bonds right now, and investors are requiring higher yields to put their money into these kind of assets. Moving over to the weekly chart on the dollar, you can see we got a nice bullish week again, about 0.5% higher. That 106.80 area is still holding as resistance. You can see that wick we had last week. We're above all of this previous price action, which is not great. We are testing levels back here to July of 22. If we break out from this area, we could start to see levels that we saw down in the lows of October. That would be quite bearish for equities. You really need to see this reject to the downside from current levels. And moving over to the daily chart just for a moment, it's still possible. We had this breakdown. We're now retesting this trend line. If we break down from here one more time, that would be a nice bearish indicator. But if this holds and rallies through, then we're going to be in a pretty bad spot. Next level for me to the upside, sitting around that 108 area. Moving over to the VIX on the weekly chart, we gapped up, dojied on the week. Almost hit the 144 again, still bullish momentum. Everything on the VIX still looks pretty bullish coming off of this very solid base. Obviously, it doesn't trade the same way equities do, but in terms of a technical structure, you have a clear double bottom, big breakout, and we're still looking for a potential price target up around 24.50, which is not a great thesis for equities going into next week. And it does seem like there's quite a lot of mixed charts across the board. In terms of my accounts, I did okay on the week, up about 0.6%, which is pretty good considering basically everything was flat and this big down day that we had on the Friday session. Both of these were down around 1% or a little bit more. In terms of positions, I still have a covered call here going into the Monday session. The Russell still looks pretty weak, and I'm probably not going to continue to hold this position unless we hold the levels that we are at basically right now. If these break down, I'm going to be getting out of this position. NASDAQ, on the other hand, does look a little bit bearish going into the Monday session, so I have 2 sets of covered calls here, but still holding my core position a little bit more neutral on the NASDAQ. Let me know down in the comment section what you thought of Jamie Dimon's comments or the bank earnings so far. Definitely like and subscribe if you got any value out of this video, and hit the bell so you don't miss out on any future episodes. I make videos like this every single day that the markets are open, as well as Sundays. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.